This is part 2 of my interview, 90-minute long interview with Marie Askew from Live Off Bank. If you haven't watched that video, you should go watch it. The description section of that video will be below. You can follow the link and you can watch it. That one is almost an hour long. This is going to be the part 2 of that video related to questions that I get, the top 20 burning questions from buyers wanting to buy a business. You get to hear it from Marie at Live Off Bank. Let's get to it. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy and scale a profitable business. You are a small business owner looking to increase your wealth by buying a profitable business, or a W-2 employee sick and tired of the rat race, wanting to leave the rat race behind by purchasing a profitable business. You are in the right place. Please subscribe to my channel and don't forget to hit the bell, and you'll be notified every Thursday when new videos come out. All right, guys. Well, for those of you who took the time to watch my last video, which was about an hour plus long on everything you ever needed to know about buying a business, if you missed that video, you need to go back and watch it. The description, the link to that video will be down below. You're going to get to hear everything that we talked about, how to actually be as strategic as a buyer and eventually be successful in buying a business. Now we're going to move towards the target business. Now, this is the section specifically, but we're going to talk about the business itself that is going to pay for the acquisition in terms of the cash flow. So we have what? 11 questions. We'll do our best to go quickly. This should probably not be no more than 40 minutes. So please stay till the end because we get the juiciest questions at the end. So you got to watch the whole thing. And if you know me, there's action packed. So with that said, question number 1 on target business. What about businesses with rapid growth? Can a good problem be a bad problem? How can fast growth be a problem when you're underwriting a loan?
Well, businesses that have rapid growth, although that is great, you want to see a positive trend in a business. However, rapid growth can be also a financial strain on the business, and it may not be sustainable. As you know, when you have rapid growth in a business, capital is the most difficult part of financing that growth, right?
Cash is king.
Yes, cash is king. And as you have more rapid growth, the more capital that you're going to need to secure in order to support that. So, stuff like inventory, raw materials, maybe you need more personnel. So, as that happens, eventually, there could be some cash flow challenges if you just have this huge spike of growth. I think the biggest part about any business that has rapid growth is to consider, is this scalability and is it sustainable growth? Is it just a spike in the operations? And as we saw with COVID, there were some businesses, obviously that did not do well, but there was some businesses that had these huge spikes in the operations, which really was not the normality of that business, operation. It was a spike and really no more than that. So if you see a rapid growth, the questions to ask, is this sustainable? Where is that rapid growth coming from? And is it scalable for a cash flow purpose?
Great, well said. Okay, on the same vein, customer concentrations. When do they become a problem? 10%, 15%, 20%?
Yeah, this is a great question. And we ask a lot about the customer concentration and the list of customers that the seller has. So typically speaking, a concentration is defined as 20% or more.
Okay.
And the reason why we ask that question is because if on day one, that customer leaves, where is that going to leave you for cash flow? And borrowers really want to ask themselves that. In addition, let's say they have 3 top customers that account for maybe 35%. What would their financials look like if 2 of their top 3 customers left? So those are questions that they really want to consider when they're looking at concentrations or customers that have heavy, percentages of the ARs.
So when I know that I'm pretty sure you do ask for projections, year 1 and 2 projections. I think a lot of lenders do that, and they want to see. Do you ask for modeling of what, just the best case scenario, keeping 100% of the customers, including the concentration, or you just give them some creative leeway as to what they think they're going to be able to do in the first couple of years?
Yeah, I mean, so the SBA requires the borrower to do projections and a business
Mm-hmm.
plan where there's a transfer of ownership. And sometimes, borrowers say, well, I'm going to have my controller do it, or I'm going to have, my CPA do it. And really it is for the borrower to do, because, we want them to do the exercise, because we're hoping that with that projection, let's say they change nothing and they're like, this is what we're going to do for the business model. We want them to go back to their team, look at those projections month by month, and are they tracking? It's a great tool for borrowers after they buy the business to go back and look at what they said that they were going to do to see if they're ahead or behind on those projections.
It's a way to help them think this through, right? And they would hope, and a lot of business owners don't do this, and that's what they hire me to do as an accountant, a CFO, is to do a budget versus actuals variance, right? You set out a budget, and every month you manage the budget against the actuals, and there's a variance. Are we happy or sad with the results? That makes sense. All right. All right. So during COVID, it was obvious that in some industry verticals, there were losses, right? So what about businesses now that we're moving away from the COVID years, 2021, and we're starting to move beyond, 20 was a really bad year, but how do you evaluate a business? Do you normalize the cash flow over a multiple year? Do you ever exclude a year if you have 4 years and one is bad? How do you calculate the cash flow or the losses, profit or losses on a business when you're doing the spreads?
Yeah, this is a great question. And COVID is a great example of this, that you have great businesses that were performing before COVID, had this, horrific loss. Then they tried to recover. So then they weren't quite pre-COVID numbers, so, this is a great example of, how you look at the financials, and you also look at them on a case-by-case basis. So individuals that had losses during this isolated period of time, they were able to come back to us and say, okay, we closed our days, our business for these days. We lost these customers, and they were able to provide us month by month financial statements to show when they started to pick back up, and when the comparisons became more normalized, and to show that they were actually recovering before the year end, right? So that's what we wanted to see. Is your customer base coming back? And if so, how quickly are they coming back? Are they in widgets? Are they in numbers? What does that look like? So, when there is a loss, ask what the loss is, contributed to, and how are you documenting that situation, and what did they do to turn things around?
Enough. That makes sense. Which we're building up to a finale here with it. Our questions are they're correlated. Debt service coverage ratio. I've been alluding to debt service coverage ratio since the last video. Because I'm kind of a geeky as a finance guy, it's all about cash flow to me, right? And so it's to you. So the service coverage ratio, and you're looking at a business, and you start to normalize the cash flow and say that there is, if you're looking at a 4-year spread, they say the 2 oldest years, they don't really pass the test, but then the 2 most recent year and the interim looks good. Do you do a weighted average and you say, okay, well, the 2 years that they're actually were over 1.5, maybe even 1.8, that service coverage ratio, how do you make your decisions?
So, I mean, typically you like to see 2 filed tax years and interims that look, that cash flow. You do see some that are the last fiscal year with the interim statement, which is under SBA. But on a typical deal, like in a perfect, utopia, what you would like to see is 2 years in an interim financial. However, what you can often see is last fiscal year and interim financial with trends leading up to greater cash flow. I think that's probably typical just because we are still coming off of the COVID numbers. So when you provide the financials, that COVID period is still part of your 3-year package right now.
Yeah, you still, even now, 23, if we look back 3 years,
Yeah.
you're looking back at 21, which is kind of, we were just starting to come off it.
Exactly. So normally speaking, we're seeing, the 2022 numbers. 2021 was for some industries a little bit off still. So we ask those questions like, how many days were you closed? What was this drop to? Why did, sometimes we're asking, well, why is your revenue so high? And they'll say, well, in 2021, we were still recovering because of our customers, of the supply chain issues or whatever. But our reality is really our 2022 numbers and our interim. And then they could do comparison interim financials to show that first quarter is actually pacing at the same quarter of 2022. So sometimes comparisons are great proof in the pudding kind of scenarios that they can provide for that.
Okay, that makes sense. Typically, when I'm working on a sales side deal, I like to go back 4 years. So if I'm in 23, I want to see, the sellers actually filed, 2020, 21, 2022, and I want to see the interim 2023 as to the closest month possible. So I'm asking for April 30th fully reconciled financials, P&L and balance sheet. So it's good that, we usually try to average it out, and but when you're dealing with sellers, it's their opinion. Oh, this is only going to get hockey stick from here on out, right?
Yeah. No, I mean, you really hope you see that trend, but it doesn't always happen that way. But
we buy on the past and we hope for the future, don't we?
Absolutely, very well said.
All right, so we already covered a little bit about projections. I understand that it's mostly P&L driven. You're not going to need a rudimentary balance sheet, do you? Just when you ask for a 2-year, P&L, and the first one is usually the 12-month spread, and then you look at a 1-year complete year, right?
Agreed.
No balance sheet requirements for a projection.
I think that it's good to know what their balance sheet is going to look at because it does help a borrower really assess and do that exercise, right? All of that financial information is important for small businesses to have a basic understanding. Maybe they're not experts, but then at least they know what questions to ask.
Right. Fair enough. All right. This is a fun question now. What industries does Live Oak Bank it's doing deals in? What is your area of expertise, and what do you crave more of? Come on, tell me.
Well, I mean, I do lending in a variety of different industries across the nation, so I'm not industry specific. However, Live Oak Bank has over 30 different verticals or specializations, like I had mentioned. I think some of our top industries for Live Oak Bank, though, would be, self-storage for sure, educational services such as daycare, senior care facilities, veterinarian services. Again, we talked about the HVAC, plumbing, service contractors. Another, one that I think is great, hardware stores. We do a ton of business too in the quick service restaurant franchise. I would say last year I did a lot of manufacturers. So there's a variety of different industries that are hot, and we have specialized groups to support those. So it is an exciting time, because when you have that industry, specific niche, then you have the analytics from the performance of the portfolio. You have that dedicated underwriter and processors that provide valuable feedback, quicker turnaround times, and I think a quicker close as well.
You're stuck trying to figure out how to buy a business? Trust me, it happens to everybody. If you haven't bought a business before, you need help. I want to help you. Let's schedule a free complimentary call so we can dive deeper into your very own situation. reach out. All you have to do is drop me a comment below or email me directly. My email address is in the description section of this video.
Well, here's the cool thing. I mean, when you become familiar with an industry space, you understand you guys have internal data about KPIs, right? You know the KPI, you know what no, there's no secret. I like self-storage. So, you would understand, you can actually advise a buyer about trends, right? And run rates and gross margins and cap, and cap rates and what would it look like? And, what is a good deal? You can see a good deal and the potential for even better returns if you have somebody who's managed the business not the best way and still makes a good money. What happens on the hands of the right buyer, right? And that's what I think it helps somebody like you guys when you have certain industries, you have really deep expertise, because that's what you provide intelligence that maybe some other people who actually just dabble in the industry vertical don't have. Correct?
Exactly. Especially because, I mean, other institutions look at self-storage as special use. They won't do startups, and again, every bank can't do every deal, and they're going to stick with what they know and how, they can manage that risk within their culture. So it's not to say that, because we don't do one industry and another person does, it's just the culture of the institution. But, self-storage, like you said, we look at ground up construction startup projects across the nation. And we do a ton of self-storage projects that are new or acquisition that other lenders maybe wouldn't be enticed to do. And it's because we've done them for a very long time and we have, like you said, the data to support them.
Excellent. And I'm a sucker for data. Cannot get enough my hands in enough data. I have enough software subscriptions that I just like to play with. I'm a financial analyst. I can't help myself. I like to crunch numbers. All right. So the flip side is, what industries are you not in or do not want to touch? Can you tell us some more about those?
Right. Agreed. And again, not every lender can do every deal. So cautionary industries, I would say, are anything that's like a cyclical business, such as a business that is completely reliant or dependent on residential development, businesses that are environmentally sensitive industries like gas stations, e-commerce businesses. A lot of people are very interested in those. But if you have a concentration in the distribution of, let's say, Amazon, a single commodity, then, those probably are not, industries that we're going to be moving forward with.
Well, if you're doing business, no disrespect to Amazon, but if you have built an FBA, a fulfilled by Amazon store, and Amazon decides not to do business with you, what do you have?
Agreed. Yeah, that has been a topic.
I think if this is a great lesson for anybody wanting to get into the e-commerce space, is you want to build a business that does not rely on a major player, that you can stand on your own 2 feet with your own website, and you don't need anybody to do business. And you draw, it's like you have your own proprietary list of email customers that buy from you every month, regardless of the platform, right? So you would be open to see something that makes sense. But yeah, in general, I don't really like those as well, because it's just you're one single point of failure kind of business.
Agreed. And I think, people have to, again, go back to that question that we had earlier in the other segment, that, if that one customer goes away, where does that leave you for cash flow? So it's not to say, I have businesses that I have financed that is a portion that they say, well, we do sell on Amazon, but the majority of our business comes from all of these customers. So it's not to say that if you do sell something through Amazon, through your business, that we won't do it. It's just that if you have a single concentration with Amazon through that e-commerce business, it's most likely, not going to be in our wheelhouse.
I am picking up what you're putting down. I mean, it's just, I believe the same things you do, so it's great. Couple more questions. Quality of earnings reports. When are they necessary?
This is a good one. Yes. So I think on more complex merger and acquisition loans, they should get a limited scope of quality earnings report, or any divisional business that is being purchased. would also require a quality of earnings report. But I think we see the request of a quality earnings report for cash flow and working capital peg in the larger transaction. So this means, the SBA loan limit is 5 million. However, Live Oak Bank finances those larger transactions between $5 to $10 million. So we do that through a pari passu combination structure. So those deals normally request or require a quality of earnings report from a reputable firm.
Yeah, I mean, lower middle market goes from 10 to, I mean, it's such a large number. You have lower middle market beginning at 2 million and it ends what, 50 million? So I would, I mean, what is sort of when do you start saying, hey, this is the, acquisition value of, 5 times EBITDA. EBITDA is $1 million. It's a $5 million transaction. I'm just spitballing here, but that's a substantial amount of EBITDA. Do you say, well, this is where we begin? Is there like a number where you begin like, okay, there's just a lot there. There's a huge balance sheet. Do you begin at 5 million, 4 million? Does it depend on the industry, or do you wait to get to 10 million? What are your triggers?
Yeah, I would say anything that requires a pari passu structure, typically, of course, there are, exceptions to everything. But if it's larger than 5 million with a pari passu structure,
Sure.
they can most likely they're going to require a quality of earnings report. But that's not to exclude also deals that may be $4 million that have a very complex business model. That may be a circumstance that a limited scope quality earnings report will benefit you. And it's not as a, additional requirement. It's information that is very valuable and is very helpful for a borrower to know exactly, the cash cycles, the cash flow of that business, and having a third party conduct that report. So it's not as a punishment, it is as a tool to support a business that may be very complex. Now, what that number may be, I mean, it could be 3 million, it could be, 8 million. I don't really have a number, but I could say ones that are above 5 million will most likely be required. And those that have significant complexity to them also most likely will be required.
Fair enough. I mean, I think remember that the SBA, the lenders are partners, and we're helping the buyers acquire a business that they can live with. It's just another set of eyes, like, somebody who actually has deeper knowledge. You're going to get a loan and the lender feels great about the deal and they require a quality of earnings report. Is all to help the buyer, make sure that we all feel good about what the buyer is buying. Okay, we're going to start landing home now. Wow. She's excited. We did it. What about the old proverbial absentee ownership, the holy grail of business ownership? I want to buy a business. I want to be only talk to my general manager, but once a week for an hour, and then I want to be going off on my yacht into sailing into the Caribbean. What about businesses that are advertised as absentee ownership?
So the SBA frowns upon any passively owned businesses. So it is for the SBA program is for individuals that that we want to finance, active owners, and passive ownership is not the intent of the program. So if you're not wanting to go to the business and be completely absentee, you are an investor and you're not an owner occupied business. I mean, I think when people, put on their flyer, this is an absentee business, come buy it. You're going to make this amount of money. The question that I always ask myself is, how do you determine if a seller really is absentee or not? Maybe the seller is going there every single day and is working there, or maybe he's going there several times a week. But when they say absentee ownership, you really don't know, how much time and effort they are putting into the business for it to produce those profits and that bottom line. I think some of the other businesses that may be considered, absentee, but they're not, is, again, your self-storage, industry that we talked about, Leo, laundromats. Those people are actively in their businesses and they're making them more successful than just it being absentee. So the successful ones are individuals that are active in the business.
I think a lot of people are misinformed. You really truly own it. If you own a handful of stocks in a publicly traded company, say you own stock in Apple, you really don't do anything. You truly passive. You have, even if you did anything, wouldn't matter because you have no control, right? I get it. I mean, I really like the word that you use, owner occupied business. I'm gonna borrow that one. It's really, I'm telling you, I'm picking up what you're putting down. I mean, that owner occupied encapsulates to me the intent, right? If you're a shrewd operator and you own a couple of businesses and you want to diversify your wealth and you have the team, the wherewithal, and you want to be successful, you don't have to work 50 hours a week on a business to be successful. You can leverage your knowledge of your team and take another business, but you're showing that you're an operator. You don't have to work 40 hours a week to show that you're an operator and you turn a profit if you look at the balance sheets of your other businesses, right?
Agreed. That's entrepreneurs. That's what SBA is about.
Awesome. Our last question, and we're gonna open it up for final comments. I know you probably answered this in the last. I know you did ask this on the other side of the buyers specifically, but from again, what industries will you land on based on the buyer's management experience? And I'm gonna describe to you an average profile, right? 40-year-old male who has 15 years of solid, even Fortune 500 management consultant, somebody who has actually had jurisdiction being a VP of operations, VP of sales and marketing for a publicly traded company, or even a $100 million privately held company, who wants to get away, because I talk about it in my videos, leave the corporate rat race behind and become the CEO of your own company. So if you take somebody like that who has built P&Ls, has hired and fired people, who knows how to grow the businesses, who has a good sales and marketing mind, what industries would this buyer could potentially get into that you would think, I can see him doing that? Can you give me an example? Oh, SBA Industries?
Well, I think that you have to consider the management experience of this very successful person, and also the consideration that can be a supplement to industry experience, right? This guy's hired, fired, has done inventory, there's a certain level of skill set. So I think that is a mitigant to lack of directive industry experience because of the robust resume that a person may have. But I think it's in combination too with the performance of a business, because if that person's just exiting to buy a business that makes a lot of money, it really doesn't speak to them. They're not going to be passionate about it, and that may not be the right fit. So you may have this extraordinary resume, but the connection between the two isn't the right fit. So you definitely have to have that management experience that goes in combination with the business.
Well, you said it very eloquently. There's nothing more to add. Okay, we have basically wrapped up our interview. I am thrilled. Number 2. So we have 2 back-to-back that are gonna live here in YouTube forever. And you, as I've said at the beginning and throughout, that I would love for you to work with Marie. She is one of my trusted lending partners. She's awesome. I like her knowledge, her availability in the bank itself. Any final comments? Anything you would want? Any parting comments you want to make before we end today's recording?
No, I mean, I love what I do. I love talking to borrowers. I love seeing businesses grow and hearing the stories of them. It's really one of my true passions, and I really live for this job. So I'm excited to always pick up the phone and talk to my customers and really hear the story of why they're buying that business. And again, SBA lending is is the backbone of the United States. You know, it is an entrepreneurial country, and I love that we are supporting the backbone of workers.
Well said. I cannot thank you enough. Thank you again for carving out some time to talk to me today. I think you just gave us many golden nuggets. I picked up some nuggets myself. And we're gonna end now, and everyone stay tuned because there are great videos coming up every week, and who knows when I may have Mary back. So thank you very much, Mary. Have a great and wonderful weekend. Bye, everybody.
Thank you so much. Bye-bye.
For a limited time, I'm giving away my cash flow calculator. This Excel tool has been downloaded thousands of times, and what it helps you do is figure out what the deal points are from the listing agent representing the seller and what they're offering. And what you do is figure out how much your offer can be based on the parameters, and it allows you to classify or figure out how much cash flow will be left after you get a loan to buy the business. Very important. You're gonna get the cap rate and the cash on cash returns. Very important calculations, as well as the debt service coverage ratio. If you're looking to buy a business, this is a great tool you need to have. It is my gift to you. All you have to do is click on the link below. It's yours to have.